Good evening, everyone watching. So in today's session, we're going over the second part of the technical analysis courses. So let's just dive into things. As I explained, I will keep things as simple as they come. So of course, there is a lot of experience going into this. You will have to develop your skills in trading. Just like any other job, you'll require some skills, and those take some time to really master those. The better you pay attention, the better you keep track of your progress, the better you basically practice. The more you practice, I should say, the faster you'll learn all of these things, and you'll be able to basically implement them into your own trading. So let's get into things. I'll start with refreshing our memory of last session. So we know we have the Bybit exchange as our main trading platform. We'll not get too much into the trading bot yet, but this is the Bybit exchange, and we've chosen to go to the BTC-USD inverse perpetual. So right here you have the derivatives, and just to refresh our memory, derivatives is basically trading contracts with each other. Okay, so I took out paint because I just wanted to start drawing some things, because I think it might make things a little bit more clear. Bybit here functions as an exchange. Okay, it has buyers, okay, buyers, and it has sellers. Okay, and this is the buy button, this is the sell button. Which asset are we on? We're on BTC-USD. Okay, so we can buy BTC-USD, sell BTC-USD. If we're buying or selling, what are we actually doing? Because we're not actually receiving Bitcoins from the exchange. All we're doing is we're getting basically exposure. And exposure means basically that if the price is going up, if you bought exposure, you're going to gain whatever the exposure you got has profited. Okay, if you sell and the price goes down, you will profit from the price going down according to your exposure. So how much size did you buy or sell? Okay, and then the leverage is just a way that we can kind of borrow funds in order to get more exposure. Okay, so as a trader, you need exposure in a market in order to profit. Right, and there is, of course, more complex theories like getting hedged, which means you have a short and a long position, which are equally sized. Therefore, you're not really exposed to the market, the overall market conditions. So let's say you have a hedge position on, for example, Ethereum. Okay, so you're going short on Ethereum and you're going long on BTC. So you have bought BTC-USD and you think BTC-USD is going up, and you have shorted Ethereum USD and you think Ethereum USD is going down. Okay, how will you profit from a hedge like this? Right? The profit will come from the fact that your Ethereum USD should go down more than your BTC USD. How would that happen if Ethereum against BTC? So you have a pair called Ethereum BTC. Writing is super difficult here. So Ethereum BTC should go down. Okay, let's have a quick look, because the charts tell us a lot more. I have the Ethereum BTC chart right here. So let me open that one up, because it's an important chart that we always keep track on in our group. Okay, so this is how Ethereum is performing against Bitcoin. When Ethereum is performing well against Bitcoin, you can long Ethereum, short Bitcoin for equal size, and you'll still make money. How much money will you make? Well, that is dependent on how much Ethereum BTC goes up. Okay, so if you find a trend on Ethereum BTC, you can start hedging. Right, so those are more sophisticated trades. But to get back to our main concept here is the fact that when we're trading futures and derivatives on Bybit, so here derivatives, you have USDTs, you have the inverse perpetuals, which we're going to trade with the bot. But all that we are doing is taking exposure on an asset for it to go up and down, and then we have something in our wallet to pay our losses with, right? Or to get paid in. Okay, so in this scenario, I have Bitcoin as my collateral, as we call it, and I can take exposure for the price to go up or down. Okay, so taking the exposure is the main point that I want to make clear here, because if we trade spot, then we're actually buying or selling the coins. Okay, so if you actually want to buy and sell certain altcoins because you, for example, you want to send them off to a ledger or a different exchange, then you need to do spot trading, because then those assets will actually, those coins, those shit coins, will actually come in your wallet, and you can send them, for example, to a different exchange. But as soon as you're going to do derivatives, let's say you're going to trade Luna 2 against USDT, and I start buying a ton of it, it doesn't mean that I actually own Luna 2. It just means I have exposure to the price. Okay, so I can make money for the price to go up or down. If I bought, then the price needs to go up for me to make money, right? So that's the exposure thing. And you can buy long exposure, short exposure, and we have some leverage. Okay, so we can take more exposure than we can actually afford, which is also a big difference, because if you do spot trading, you can buy whatever how much money you have. So if you have $1,000, you can buy $1,000 worth of Luna 2. But with leverage, we can, for example, set our leverage to be 25x, okay, which means that we can buy 25 times the amount of money that we have. So if we had $1,000, then we could do $25,000 in position size, which means that if price would go up, we would be paid over a 25,000 contract position size. Okay, so 25 times more than we actually have. Okay, and so we get a little bit to the leverage side of things, and now we also have to start planning our trades. And this is what this course is about how do we plan our trades on TradingView, what are indicators, how do I actually plan a trade, right? All of this stuff. Okay, I can click the buttons. I know how this probably works. You have limit orders, which I wait in line, like I explained in the last video. You have market orders. I go in right away, and then you can place your stop loss with the conditional order or with the order itself. So that's all of that stuff. But let's go to plan some trades. Okay, so in my personal chart, you can already see that I have one level marked out here, 23,100, which is at, as you can see, the top of this volume cluster right here. And last course, we already went over this. This is a fixed range volume profile. So what I did here is I have it as my favorite, so I can find it in my top menu bar. Otherwise, you'll have to look for it here. Okay, and then put a star next to it. If I click this indicator and I select over the range that I want to find the volume over, and why did I select this range? Well, as you can see, we had pretty much accumulation happening right here. Okay, so over this entire price area, we had basically people buying the dip, and price wasn't doing a whole lot. It was just in a range. Okay, and then we have the breakout, and that's where I want to see within this last breakout, where did people buy and sell? Because there is a huge price movement to the upside. Okay, so if we take our price move from here to the top, we went up 41%, 42%, right? So in this 42%, what are the levels where actually people bought and sold? Okay, and this is what we see using this volume cluster. Okay, now we can also add the normal volume, which is normally on default, it's added to your chart, but I normally remove it for some reason. It just blurs my chart, and I don't really pay too much attention to when volume is becoming bigger or smaller, because it's really hard to identify it. Well, at the end of it, you might have identified it, but it's not really saying a whole lot. This is not telling me a whole lot. Well, it tells me that during the top of this, there was a lot of volume, but we had another breakout. So how useful is it? Okay, so I'm going to remove it again, and all we want to know is when price was going up, at which price level, okay, at which price level was there a lot of volume being traded. Now we can easily detect that this was one of these clusters. Okay, let's call it a cluster of volume. Okay, this is where people bought and sold, and you can see the blue is buying, the yellow is selling, if I'm not mistaken. It doesn't really matter that much for now. And then we can select this as well. Okay, this is also a bigger volume cluster. Okay, and this has our point of control. So the red line, we call that the point of control. So that's the point where most volume was taking place. Okay, in one at one price level. Okay, so that's the price level with the most volume associated to it. Okay, so then we get two levels that are important, because what happened here? Okay, just to get a picture clear. What happened here is that a lot of people took position. Either they went short because they thought at this point we were topping out. So a lot of people might have taken short positions. Okay, and then people might have taken longs because this was support. So a lot of volume has taken place in this area right here, because we went through it a lot as well. Okay, so it creates this very, very important zone, which we have now broken above. Okay, so the people who longed this entire area, so every time we hit the low, they were like, okay, yeah, we're bulls, we're the bull team, we're bull squad, so we're gonna long it. Even when we did the retracement to the point of control, they started, like, all of them started buying at once, which brought us right up to new highs. Now we're getting back into this zone. Okay, so the same bulls that bought this, did they all get to sell here? That's the big question that we need to ask ourselves. Right? Was this the liquidity that they needed to basically get out? Could very well be the case, right? Because we were kind of expecting more downside here. Then we had pretty much the market take out the highs right away and come back down. Okay, so now we have kind of debunked this session on a broader level and on a very simple way. Okay, but simple but effective, because we actually know the levels of importance, right? So we could even move this one if we would like to be a buyer here. We could move it at the top. We get an alert. Okay, this alert will let us know that we need to get into a trade, and we can go to our bot pretty much. Okay, so let's get into indicators, because we've discussed the differences between spot and futures trading slightly, which brings us to the point of what are indicators and how can they be useful. Okay, so there's different types of indicators, and a lot of the times you guys can see that I have some type of RSI on my chart. So let's start with the RSI, because I think every beginning trader gets exposed to this RSI indicator at some point in time, and it just looks a little bit too good to be true, so they of course go for it and try it out, which makes total sense, because it's still an indicator that I use. And what does it do? It basically takes an X amount of past candles. Okay, so all of these candles, it takes, on default, it takes 14 lost candles. So let's say we are trading right here, right now. Okay, so it takes the 14 lost candles, and then it decides whether price has gone up too much or down too much relatively. Okay, so it just takes the price movements within these candles and then gives you a relative oscillator on based on whether the asset has gone up too much or down too much. Okay, and it's literally only based on those past candles. Okay, so it's just what it is, right? It's giving you very simple information just based on the price movements of the last candles, and giving you an oscillator on that. Now, to make this a little bit more I think more useful, I would say, I found out very early on that there was something called the money flow index, which is the MFI. Okay, and if we add it, we can see, hey, they are looking very, very similar. Okay, so let's go over what the MFI does. We said that the RSI, the relative strength index, takes on default, so let's open it up quickly. It has pretty much one main input, which is the RSI length. They recently added an extra moving average on top of it, but I always remove that one. So the RSI has one main input, which is the how many candles you want to look back for the calculation. Okay, so how many past candles. And then it has the source. So how do you calculate your indicator? Okay, so based on the open, high, low, or on the close, or whatever, right? So we leave this on the close for now. This length decides how many candles you take into consideration. So we could pretty much set this higher. For example, let's set this to 50. Okay, if we increase the length of the RSI to 50, it's going to take more candles into consideration before it tells us something is overbought or oversold. Okay, so if you want to get better signals from the RSI, signals that carry more weight, you can increase the length so that the indicator takes more candles into consideration to give you a high or low value, basically. But what you also get is less signals, okay? Because what we can see is that we only get 1, 2. Okay, so we only get a few signals here. When we don't change, this is the MFI, but when we don't change it, you can see we get a lot more movement. Okay, so a lot more signals overall. Okay, so that's the give and take that you have when you increase the amount of candles. You get better signals, but at the same time you get less signals. Okay, because there is less of those extreme moments. Okay, so where the RSI takes only price movement into consideration, what the MFI does is it looks at volume. Okay, so the MFI does the same trick as the RSI, which is turning the candles into an oscillator for us, but instead of taking price movement within the candle, it looks at volume within the candle. So how much did people buy or sell? Okay, and if you're only looking at how much price moved, I think you're missing an ingredient, right? So let's change this back to 14. So now we have the RSI and the MFI. The RSI is telling us, based on the past candles, how much did the price move. The MFI is telling us how much volume moved. And now we can see slight divergences. Divergence basically means, okay, the candles moved a lot in price, but there wasn't actually so much volume respectively. Okay, so we can see where the market is doing something kind of fake. And what I like to call it is absorption and distribution, right? When you have a lot of volume coming in, but the price just doesn't want to go down, what can we say? Well, the volume is being absorbed at that point in time, right? Because there's definitely people selling, but at the same time, we don't see the candles going down as much, right? So having those two, you can find divergences between the two, which can be helpful to trade, but I think it's just a very helpful concept to understand about oscillators, about RSI and MFI, what the differences are, because this brings us to the point that for trading indicators, there is two main ingredients that go into the indicators. One of them is volume, so how much quantity did people buy or sell of this asset, and another one is price movement. So how much did the asset move? Okay, how much did that volume, did that quantity of buying or selling, how much did that make the price move? Okay, so those are the two main ingredients that go into trading indicators. But of course, this is only for spot trading, because there is something else, which is derivatives trading, which we also do. And as we already discussed, in derivative trading, you're trading contracts. Okay, and Bybit kind of manages how many people bought, how many people sold. So a seller basically sends a trigger to Bybit that he wants to sell, and they will find a buyer that matches your sell. Okay, so they will always, and that's why they call exchanges like Bybit and Femex and whatever, they have a matching engine. The matching engine basically means they as an exchange do not hold exposure. They just find buyers and sellers and they match them with each other. Okay, so they always need a balanced out system. They need just as much buyers as they have sellers. Now, what happens if there is not enough buyers or there's not enough sellers? Okay, so what happened if an asset is just really hated and there is only sellers coming into the market? Well, then we have the little thing we call funding. Okay, funding is basically when Bybit finds out that their matching engine has too many shorts coming in and there is not enough incentive for the buyers to buy, okay, and the price isn't going down enough, they will first start putting in the funding, okay, which means basically they're gonna pay for people too long and they're gonna take that money from people who are selling. Okay, so if the funding is, for example, minus 0.1%, okay, and the funding is paid on Bybit, it's paid every 8 hours. minus 0.1%. This is a favorable funding rate for the bulls. This means a negative funding rate means that the bulls are getting paid. So every 8 hours, the people who are short will pay the people who are long, 0.1%. Okay, and this goes on every 8 hours. Okay, if the funding stays negative. If it goes back to positive, that means that the people with the long exposure have to start paying the people with the short exposure. There is always a funding, okay, and sometimes it's super low, it's 0.001 or something, but yeah, there's always a funding around, and that's basically the main difference when we look at the exchange. You can see the funding right here. This is the default funding, okay? So on most assets, it costs you money to take long exposure, and you get money to basically short, okay? Now, this is super interesting because if we know that, this also ties back to how Bitcoin moves and how most of the crypto assets move, in which they go up very rapidly and then they take years to take out those highs. What's happening here is basically the market makers, the people who own most of the coin, take their short positions. That's their main goal, okay? Taking short exposure. When they take their short exposure, the next years they'll tempt you to keep buying, and they'll try to get you in a underwater position. Basically, you bought the dip, there was another dip, you bought it as well. Now you're invested in this asset, right? Now you're invested, now you want it to go up, and some people do that by saying, hey, I just forget about this wallet, and then I meet a lot of people who invested, right? And then I would say, hey, how is your investment doing in Dogecoin or in Shiba Inu or in Litecoin? And they would tell me, yeah, I'm not going to watch it anymore. It's fine. I'm going to forget about it, right? And that's basically you're invested. At that point, you're invested. You're locked in the range that the market makers have given you. Okay, you got in at their hype moment, and now they at the hype where most of the people were getting in, they were pretty much selling the asset. Okay, so that's tying back to the funding rates. Right, because they are getting, for years, they are getting paid on their short position without doing anything. So they took a good short position and they stay in that short position. This is a trend that I want you guys to take note on. And when we go up very, very fast. Okay, so timing the market is really, really hard with crypto assets because they go up very fast, but then they come down for a very long time. So it's very hard to find that moment where they're going up again. Right? Let me know if there is any questions so far. Let me have a quick look. Okay, so let's start off with just charting. So with a clean chart, and like how would we create a chart? How would we start making a plan? So let's do it on Ethereum USD. The main thing that you want to do is you want to zoom out. Okay, so you want to start with either the monthly. Okay, this will right away give you a very good overview of where we stand today, respectively to the entire cycle of this asset. Okay, you can see we've traded up, came back down, pumped. Now we definitely came back down. We could basically come to this zone, which would retest the start of this rally. But this is already retesting the last all-time high, so it's giving you the right view from the start. First thing you always want to do is take out your volume profiles, because these are telling us that yes, during the pump here there was a lot of volume. Very nice to know, but we need to know at which price levels did the most people buy or sell. Okay, now we can see this is the main level. Around $150 was the level where most of the buying and selling has happened. I would say this is capitulation. Why would I say that? Because I was the person who sold my mining farm around this area. So I definitely capitulated while the bear market took very long. Mining was getting unprofitable, especially in Europe. So a lot of people sold their mining farms around this area, and me being one of them. So this was capitulation. A lot of selling happening around 130. People not believing that this would go up anytime soon. Also because of the pandemic, of course. And then we had people with more money basically taking over the market and pushing it to new highs, which we had right here. And now we're retesting the important zones. But if you really take your volume profile from the start of Ethereum's price action, you can see that everything that's happening here has a very little weight to it. Okay, so it's really these entrants into the market or into position, they're not that important if we compare them to what happened right here. Okay, so around 300, let's say the start of that, let me remove those ugly yellow lines. Let's say the start of that would be here. Okay, this is where we get really the bigger, okay, let's zoom a little bit into those volumes. This is where we really get bigger volume happening, right? So I would say we came pretty close. That's a valid point one could make. But I wouldn't be super surprised if we really came and retested some of these more critical levels, where a lot more people have taken a position for long term. Okay, so that's what I'm seeing on Ethereum when we have the very zoomed out view. Could we say that there is importance here? We could, but I would rather do that on a lower time frame. This is the monthly. We go down to the weekly. Okay, so maybe we should write this down in a note here, because this is how I want you guys to think about this. We have 3 types of views. Okay, we have the macro view, which we are doing right now. We have the monthly, weekly, and 3-day. Okay, so that's what we are working on right now. Then we have the meso view. We're going into that after this. That's a daily view, 4-hourly view, maybe the 1-hourly or 30 minutes or 2-hourly, depending on what your preference is. And then we go to the micro view, which is really for entering. Where would you enter? 50 minutes, 5 minutes, 1 minute, 30 seconds if you're into that, right? So the lower time frames. Okay, so let's continue with our macro view. We have the weekly. We're going to look at the weekly. Okay, it's just a little bit more detailed as the monthly, but it kind of gives us, still similar type of view. In this, we want to start from the rally that was kind of fake-ish, right, at the pandemic, after the pandemic dump. So we want to take that from the moment that we see volume on the lower axis is increasing, so we know, okay, this is the ranges that are important right here. And now we can start marking another couple of levels here, because I see that a bigger cluster starts here. Okay, and we've already broken this one, so we could say that this is a green one because this is support right now. Right, if it holds it, because the candle is still not completed above it, the candle body is still this candle still has 2 days and 5 hours, so we should sustain this level and preferably pump upwards. Okay, so now we have another couple of levels. I don't see anything else that I would add. I would add this, but the shape of it is not what I want to see, because then I would put it here and it's too close to each other. So I'm going to ignore that for now. What I'm going to do is, like I explained to you guys in the last session, you want to always find. Okay, you want to kind of always look in the chart for waves, and we can see there was an up wave like this. Okay, and then there was a down wave like this. Okay, so we see the up waves in this, we see the down waves in this. We have already taken our volume profile from the up waves to the current price. Let's take it from the highest price, so from the waves down to the current price, and then we get a much better picture of what is very recent. Okay, so of course, the more we go towards the current price action, the more recent this all happened. Okay, so these positions are much more likely to play an effect on the price than the positions that, for example, took place here, because they might have already taken profit, maybe here, or maybe the day after they took an entry. Okay, so that's also something to take into consideration. But let's go back to our levels, and now we can see, okay, this level we put here, very good, because this is actually a very important level. We should sustain this particular price level, 1633. Okay, so practice this, do the same thing. Maybe you can even take this level and put it on your chart, see how it indeed reacts to price, how price reacts to the line pretty much, and go from there. And then we can mark this level right here. Let me explain it. Okay, again, we want to put the line right where the bigger part of the volume starts. That's where the bulls will start defending a level. So let's put it right here. We want to color it green because it's going to be a support level, and we want to mark this one because it's so close to the point of control. We want to mark the entire level. Okay, so we give it a little color code. And there we go. We have two major levels. So if we lose this one, we could come for a retest, preferably around 1353, and then we should look for higher again. Okay, so if we come here, let's say that the price has traded here. Okay, price has traded here. What will be our resistance? Well, you simply shift this line downwards to where the volume starts, because everyone who took a short in this area will start defending it where their entries have started, where they have taken their entries. Okay, so at the start of that. So you just shift it to the downside, you color it orange. Okay, now this part would be resistance. If you start breaking back into it, you can look for upside. And that's where we are right now, because we have broken into it, we have gone above it, so definitely looking for higher. Okay, as long as we can sustain this within 2 days, we will be looking for higher on this asset. We have a point of control at the low, so this whole trade could invalidate at 12.31, something to take into account, because 13.53 would still be a nice buy level. Okay, so now we have got our weekly view pretty clear to us. We could do some FIPS, but yeah, actually let's do that right now, because I think we're in the flow of debunking these waves. So let me just debunk these waves completely with you guys, so that you have a view on how you can just get that a little bit more confluence. And I think this is the word that we need to remember in this session. Okay. Everything we're doing is layers on top of layers of confluence. Okay, it's not one thing that's going to lead to us making money. It's the multiple things. The more things we can find that suggest a trade is the right trade, the better, right? And we call that levels of confluence. I personally need at least 2, and I would say even 3 levels of confluence in order for me to take a trade. So for example, it needs to be at one of these support levels, and it has to have like an EMA or a FIP that aligns with it, preferably both of them. So a FIP and an EMA that aligns with it. Okay, and then I have 3 confluences, 3 indicators that tell me this is the right trade, and that's when I take a trade. Okay, so levels of confluence, important word to kind of remember. But in this wave that we have right here, I want to kind of go over the Elliott waves, right? Because we said that it's really good to predict when price is ending, when it stops going up, by using your Elliott wave. So we're going to zoom out a little bit more. Let's go to the 6 hours. Okay, and then we can see the waves here. Okay, you can see. Let's start right here. Let me zoom out a little bit more. Okay, actually, let's start right here. Okay, so I don't remember this exact count anymore, and I don't want to get too much into it, so I want to keep it relatively simple. So as you guys can see, you have here an order block, so a lot of trades happening here, which is also supported by a volume cluster. So let's say you're back in time, so you only can see this part of the price action. Okay, only what happened here. You can simply put your support right on top of this. Right, so let us remove that one. Oh, no, let's keep it there. You can remember that this is the one that we just placed, and I can maybe make it like a dotted line. So this is the one we just placed. After we break out of it, okay, we come for a support. Now, well, you could say this missed it slightly, so I didn't get in here. You make new highs, but what you do is you come back to test that support area once, twice, 3 times. Okay, so you come to this volume again, or these positions again, and they defend themselves. And now you make the last high, and I can already see that because in retrospect, but this last high is really interesting because you can see the wave and how it ends, right? So someone in our group asked, how do you pull FIPS? Okay, so if you are looking for a retracement, you take your FIPS and you take them from the lowest price to the highest price. Okay, and then if you're trying to buy, you take it from the lowest point to the highest point and you look for buy levels. Okay, so your golden pocket 786 and maybe lower, right? And you can see in this particular scenario, it reacted on the 786 a couple of times. We came back up, but then got rejected lower. So when you're trying to buy an asset that has gone up, so you're buying the retracement, you take your fibs from the low to the high. But when you're trying to sell an asset that has come down, okay, you're taking your fibs from the high to the low. Okay, so it has come down, and now I'm looking for a selling point. Well, this comes to the 0.5, but maybe you missed it because you were waiting for the golden pocket. Okay, so that's quickly how you pull your normal fibs. But then we have the fib extension, which tell us how big is a wave compared to another wave. So let's first quickly give you the waves we're looking at. 1, 2, 3. Okay, we can quickly spot that this is a 1, 2, 3. Okay, and even when this is happening, maybe you're trading somewhere right here. Okay, you can start taking your fib extension, take it from the lowest point to the highest point, back to the lowest point, and then maybe go a little bit to the right with your mouse so that you have the touching point, and you can see how close we came to a 1-to-1 fib extension. Okay, which means that we nearly finished. Maybe if I take it from the very low from these wicks, it would be a perfect touch, but you can, like I said in the first one, trading, like nothing is textbook perfect, right? This is just helping us to navigate the market. So we can see that we have a finished ABC right here. Let me click. There we go. A, B, and C wave, and the so we have a finished ABC. Okay, so you could start getting short here and maybe stop losses around here. If price goes up, holds a candle above, you can start getting out, but this is an interesting level. You've already taken out the highs, you've done all of that. That's why it's very important to always look for these ABC patterns. Now, when the price is going down here, and this is where we are today actually, so it becomes more relevant to us, we can see a similar thing, because we can see the price is going down, wave 1. We can see prices retracing, wave 2. We can see prices going down again, wave 3. And what do you know? Those waves look awfully similar in size. So we take out our fib extension again. We take the high to the low of the first wave, back to the retracement. And oh my gosh, that's perfect, right? The first one was off by a little bit, but this one is just picture perfect, like. Okay, so then you can say, okay, this is a finished ABC wave here. A, B, C. Okay, when you know that you have a correction that is finished, this is just one of the ingredients that you need, because this is macro level. You can very clearly see these waves on the macro. This is not something you needed to go to the 6 hour for. You can see this on the daily, you can see this on the 3-day, weekly. Okay, this is very clearly an ABC, and these are also ABCs, and this is a 1, 2, 3 impulse wave. Okay, so now we have our waves debunked. We have some of our levels on the chart. Now, here it's also very important to take, so you can see there is some accumulation happening. Okay, so when price goes sideways in a range, there is accumulation or distribution happening. Distribution meaning the market makers are taking short positions, so they're taking their sell side in order to bring price lower. Accumulation is when the market makers are taking the long side in order to take price higher. How can you spot these most simply? Like the most easy way is using the volume profile, okay? And you want to again be on the right side of the volume profile, okay? If most of the traders are in profit at the lower end, you want to go up with the price. Okay, so you can see just like with Ethereum, oh, this is still Ethereum, by the way, we can see point of control at the very low of this range, so around $1,200 and 1327. That's where we're finding support right now in this range. So we go back to our 6 hourly chart, see if it looks any different there. Probably not. No, it doesn't. Okay, so we're defending this 1633 right now, and let's remove this one because would that be relevant to us? No, really. Okay, so those are the levels. Could be relevant, but not for learning TA right now. Okay, so we have our levels. We're going for a breakout right now. That's what we know. These all these levels in between don't look awfully relevant to me. But what we want to do is okay. So the most recent price action. So what is the most recent price action? It was basically a dump. Okay, and then now we are forming something, because here you cannot really say something has finished yet. Right, this is the wave that's currently forming, and I would say currently it looks mostly to be like 1, 2, 3, 4, and we're missing the fifth wave. Okay, so then you would have something like this. Oh, didn't click it. So you'd have something like this: 1, 2, 3, 4, 5. Okay, and for a fifth wave, I like to look at 2 points. Okay, so in order to, I'm going a little bit ahead of myself here. So this is the most recent wave that is forming. It's an up wave. We're not going to get into that. For the down wave, we have it right here, and you can add levels like this, like confluence. Okay, when do we break this trend? It's right here, and then you can see an accelerated move as well in price. This is also the acceleration in price. You can see also aligns very, very beautifully with this gap in volume. Okay, so this gap in volume basically allows us to not be stupid and take positions in price areas where there is literally no relevance. For no one, there is no reason to be in a trade around 1465. That's short, right? Or even long when it's not a time too long or short. Because we're actually, every time we're coming into this price action, we're shooting through it, and you can very easily detect those areas with this indicator. Well, why is it so important to detect these indicators? Because as a trader, our main goal is to get good risk to return trades. Okay, so what you're trying to do is avoiding these levels, avoiding entries in these levels in the wrong side, and also trying to make benefit from them, because if you take the right side, it's a very quick profit, and you can see that this is probably like a 16%, 14% drop. Okay, so if you take entry here, you go short back here, you already have 14% locked in. If you compound that into the next trade back up, okay, you could have a lot more. So yeah, this is the wave down. Let's just take a quick volume profile from here as well. We have our levels. Okay, we're gonna look for upside, and the wave that went down to these lows, so these we could call them the most recent lows. We take our fib from these highs to the low, because while we are going up, some of these levels might be defended by bears. Okay, so bears might step in around this zone. This is what we discussed last time as well. This area will be interesting for the bears. Of course, we're in the golden pocket, so this is also a selling area for the bears. So now we have two prices we're actually having to keep an eye on. 1633, if we break below it and find resistance, we can look for lower. Breaking below 1530 is really dangerous for any longs, because we can shoot 14% to the downside. Okay, so cover yourself definitely around that price. And we have an area of potential resistance right here. Now, in this last wave, we already said we saw an impulse wave. So that means 5 waves. So 1 wave up, 1 retracement wave, another wave up, next retracement wave, and now we're expecting that last wave. Now, in order to find what you're expecting, as in many indicators are what we call lagging indicators. They basically need volume to calculate the indicator, or they need the price to move to calculate values and to give you predictions. They're actually not predictions, they're basically measurements, right? But with the fib extension tool, we can actually make predictions. Okay, so that's one of the few predictive indicators. So we take it from the low of the first wave to the high of this first wave, and then to the retracement of the first wave. We extend it a little bit to the right, and then we can see if this is the first wave, like we said, this is the retrace, how big compared to the first wave is the second wave. And we can see it's now touching the 2. Okay, so we can say that this is our first wave, And now at the 2, we can say it's completing, could make a retracement and go for a third. Okay, so let's zoom in a little bit. Let's get these away. Let's say that the third wave has finished right here. Oh, right here. We would then, to figure out the fifth wave, we do not have to take our fib extension, but we can just take our top from the third wave down to the bottom of the fourth wave, and then we get where the fifth wave should be, and it was awfully close to hitting that, so this could have been the fifth wave. Last little confluence, we zoom down a little bit more, so we go into the 4 hourly or maybe even the 1 hourly, and we take our volume profile again. Let's remove the volume profiles that we can't see, and remove this little thing right here, and then we take our volume profile and select it over this little range that we have forming here. Okay, let's remove some of the fibs just to get a better view on what's happening here. And so the price has gone up, but then it has gone sideways, and over this sideways price action, I want to see what are the levels that are actually important, where price is actually likely to move from. And we can see that we currently have come down to the point of control, which is at 1633, like we discussed earlier, and we're making an upwave. Okay, so we can start zooming in a little bit more. Let's go to the 30-minute here. And guys, just look at how these levels, as soon as you start zooming in, you can see how well every level is being respected, right? Because we did our technical analysis, now all of the lines are like magically matching up, and we can remove this. Now over this area, you can again start pulling your fib, finding out, oh, that's interesting, we have resistance. Okay, so your first, and don't forget, you're now at the 30-minute time frame, so the resistances become less important. Okay, so the lower you go, the less important, the less value they hold. And we have a support area right here. Let's not forget the support, of course, and put them at green, put them at the dashed line. Okay, very interesting how this has bounced right off our support. We're a little bit late, and let's measure out, because this is another thing, you cannot forget to measure your move. So let's say we were a little bit lower at this candle, then you can say, okay, I'm going to gain 1% approximately if we go all the way to the top of this range. Okay, and then we can start calculating in how much leverage are we taking, how much should our position be, how much are the fees, okay, because there's also fees if you're trading on Bybit, you need to pay fees. We have a link in the Bybit description, in the YouTube description, we will have a link that will give you free trading fees, but that's only for a limit order. Right? So what if you have to do a market order? Because sometimes the price is just going up, and you cannot really wait for it to come down, because it's not really coming down, right? So when you have a trade like that, it hit your support, but you really want to take it. Let's say our target is a lot higher than the 1%, and it's just worth for us to take this trade. Well, then we go for a market order. So let's do that right now. Let's just do a. Oh, I don't have any USDT here, but whatever, we just do it with the 0.7 USDT, and you can see that you can't see any fees that I paid because it's too low. Let me take another account. Okay, so just a random coin here. No, let's not buy Luna as an example. Let's just do something else. What was I buying? Unify or something. Unify was looking interesting. Okay, so if I do, for example, a market buy here. Okay, so I opened the market long. You can see right away I realized 18 cents in a loss for a position that is $303. Okay, so if I want $303 exposure in Unify, OnFi or whatever it's called, then I require $13 in margin because I've set it to 22x leverage. And this will cost me this position to open it, okay, because I had to buy from the first person selling. It cost me 18 cents in fees. Okay, so that's also something to take into account. The more leverage you use, the more in respect the losses are from fees. And if let's say I want to go out for most of it, so close 40, close long. So let's say I want to go out for most of it. Now I'm 30 cents in a loss and I haven't really done a whole lot. Okay, so it really adds up. Opening and closing trades in a loss, it really doesn't help a lot, and it becomes very expensive. Now that's why you definitely should try out the trading bot as well as the link that we provide, because what you can actually do is take a limit order and it will be free of charge. So because I'm waiting in line here and the price comes down, okay, you just need to be a little bit patient because price always moves up and down, and that's just how the market works to basically force out liquidity. When is Bybit making money? Is Bybit making money if the price would just not move for a day? No, there would literally not be any exchange around that would make money. So the only way that they will make money is by having the price move up and down. And that's their only, basically, that's their only goal. Okay, the more volatility, the more they make, the better for them. So they will always be luring you in and out of trades, mostly in of trades. The out is mainly if you'd be liquidated or lose your money, right? They will always try to lure you into trades. Because that's when the market earns money, but that's also when the liquidity is big enough for the bigger players to enter their position. So we have taken a market entry. We saw that it cost us money. Now we've taken a limit entry. It was totally free. Not on this account, by the way. This is my own private account that I have, and it doesn't have the 0% maker fee because it's only for new accounts. So you can see it did cost me some money here. So I did a limit order, but it still cost me money because this account has isn't using the affiliate link. So it's just a bad example right here, but we can do it right here. So because most of us are going to trade the BTC USD in first perpetuals, it's a lot simpler as well, because on the USDT perpetuals, let me just quickly explain this to you guys. On the USDT perpetuals, because I'm sure some of you will be trading USDT perps, you can decide, let me see here, there is an option, I think, standard. Well, anyway, they had something like hedge mode, but it seems to be changed right now. So yeah, I don't see it anymore. But they used to have hedge mode. Currently, you have to open and close trades. Is that for everything? Let me just quickly check. Okay, so if I have my position open here, limit open. Okay, so I guess I've set it on my account to be disabled. Anyway, let's go to the inverse USD. Sorry to bore you with that fake information or false information right there. Let's go back to BTC USD. Okay, so now we know we can take exposure. We know what to look for. Let's look for a little trade. I think that will sum up everything nicely. We can see we got super close to my level here. Okay, that we looked at the very beginning of the chart of the trading, and you can see it nearly touched it, and it's now going up. So what we can do is quickly take out our bot and set up or activate the bot and have a quick look. So what we want to do is, with the bot, we want to quickly buy up the dip, okay, and yeah, see how far it gets into that, and maybe we can take a manual position to just see the effect of both of it. So we're going to take 10% of our position manually, and if we buy that, we can see we paid 76 cents to get into a position, and the rest of it we'll let it up to the bot. So let me launch it up quickly. Okay, let's wait for the tables to load here. Okay, so we're going to buy this dip, and for us, it shouldn't matter if it comes down a little bit more and then goes up. Okay, so I can do two things. I can buy aggressively, or I can be a little bit more patient, and we can decide that in a little bit, and trade this for higher. Now, when do I basically stop my bot? Well, if we start breaking this level, so if we start going below this volume cluster, I will start being really careful. If we don't bounce very quickly, I will get out of my short, my long, sorry. I've loaded up the bot, and we want to load up the test web interface, which will give you the browser right here, and we want to refresh that quickly, refresh it again if it doesn't work, and then let's start buying aggressively. Okay, so long ad is, I have two strategies in my personal one. It's long ad, it's the more aggressive buying, and it's a short ad, more aggressive selling. Then you have long UI and short UI, they are a little bit less aggressive. Okay, so now we've added our aggressive buying. You can see a lot of orders have been placed. So let's go to active orders. We can see 11 buy orders starting from 358 down to 195. Okay, if we go down to the chart, we can see that, let's mark out 195 here. Okay, so I'm buying basically the last low. But what I know is that there is more agents waiting. So if we hit that level, there will be more happening. And let me set an alert here. So add alert and say sell. Okay, so let's say that this is my sell side. And I now create just a simple alert. Now, as a trader, you want to automate as much as possible. So let's say that I'm not going to be around for a couple of hours. I want the selling to be happening here, but if we cross above this order block, I want all of the positions to be closed. So I'm going to make some, I'm going to combine our technical analysis with automation. Okay, so let's start up, first of all, our webhook. I'll have to do that in another screen because otherwise someone could do something funny. Some funny business. We don't want any funny business. So there we go. I started my webhook and now I receive a little link. Okay. And I just go here, notifications, webhook, and I paste the link in. Okay. But the message needs to say something to the link. Okay. What does the message need to say? Well, then we need our user interface. We go down to create a signal, bottom right. And the signal is to activate short UI. So we're going to activate short UI by just clicking on this button right here, then clicking it to apply it, and we're going to copy this. Okay, let me quickly check if everything is correct. Yes, it is. And now I paste this message into right here. Okay. All right, there we go. I pasted it in. Something went wrong, I think. Ooh, leaked my password. Have to delete that account. Okay, no problem. Now we get to the ngrok link. Let's not link that as well. Leak that, I mean. There we go. Have the ngrok link. Pasted it in there. Oh, pasted it in there, I think. There we go. Okay, so now I have my trading view ready. Now I have an alert ready at this price. So it says alert, sell, and this will be sent to the bot. So then the bot will automatically start selling, right? Because currently what is the bot doing? It's buying. So let's have a look at it quickly. If I can find the browser that we were having a look at right here. Okay, so the bot is buying. We had 70 something cents in a loss because of the fees. but now it's slowly doing its thing. It bought some more contracts, so we started with 1200, now we're at 1400. Let's have a look if I'm correct there. Yeah, we bought 1200, then we bought 100 and another 100. Okay, so there we go, the bot is trading upwards. And let's wait for the first trade to complete, then we can see also that it's going to realize us some profits if we're indeed right. But let's go back to the chart here. That's fine for now. 55 EMA, very clean how we're touching right here. Might stay in this little zone between the 55 and 21. That wouldn't be a great sign. We actually want to pump from this 55. It's really, really important that we do not break the 23K level. But we're getting into a big resistance area right here. Okay, so we have our alert ready. Let's see, where did we put that alert? That's another chart here. Okay, so our alert is right here. Let's move it a little bit down. Just why not? This is the Ethereum USD. Okay. I'm now placing Bitcoin alerts using an Ethereum USD chart. So don't make those same mistakes. Don't be so messy as I am currently. But it's just as an example anyway. So I'm okay with it for now. Let's have a look. Is there any questions, guys? Because I know there's too few right now in the chat. If there is any questions regarding this, feel free. Let's see how long we've been going for. 1 hour. I think I will have to end it right here. There's always so much more than you think you want to tell. Open interest, didn't explain that. But okay, I did most of it. I explained most of it, so I think I'll end it here. Unless you guys have questions, I can stay trading this for a little bit, but I think I'm going to trade this myself, so I don't think I'll stay online. So yeah, let me know if there's questions. Otherwise, have a great day and see you guys in the next one.